A very good morning to all our viewers. Hello and welcome. You're watching Morning Trade with me, Stacy Pereira, right here live on Money Control. And I'm here to help you navigate through this trading day with actionable trading ideas, strategies, as well as sectoral trends that you could keep in mind. And most importantly, your queries during the course of the show. So guys, keep commenting on our live feed and we'll have them addressed by our guest on the show. But before we bring them on board, let me take you through what we're getting from our global handover. Well, let's look at Wall Street then, which has clocked in against for the third straight week. Investors are cheering the better than expected economic data. Personal consumption expenditure, or PCE index, too continues to show easing inflation, giving us the hopes that the Fed may not hike interest rates any further. Meanwhile, the Asian markets have edged higher on Monday morning. Stocks in Asia-Pacific region are trading higher. China's factory activity has declined for the fourth straight consecutive month in July, but the gift Nifty is suggesting a positive start for the Indian markets. And whereas crude prices are concerned, crude oil has clocked in fifth straight week of gains amidst optimism that healthy demand and supply cuts will keep prices buoyant. The return of risk appetite amidst growing expectations that central banks like the Fed as well as the ECB are nearing the end of their policy tightening campaigns are also boosting the outlook for global growth as well as energy demand. And Maruti is likely to report an over two-fold jump in its first quarter profits on the back of strong volumes as well as those price hikes. However, higher ad spends as well as new launches may dent those margins on a quarter-on-quarter basis. And for all the stocks you need to be watching out for on the show, we'll put the spotlight on stocks like Marico, Piramal Enterprises after the board has approved a share buyback, as well as NTPC that has reported numbers over the weekend. And there's a big change in TCS, where in the first major change under the new CEO K. Kirtivasan, TCS reverts back to its vertical-based operating structure. The IT bellwether has also rejigged its senior leadership. It's elevated Herrick Wynn as a new Chief Technology Officer and Abhinav Kumar as the interim head of marketing. And lots to look forward to other than earnings. We are looking at the markets overall getting into that consolidation mode, one would say. Nifty not managing to, even go past that 19,700 level. So what's really ticking it down further? We're going to have to wait and see, and we're going to discuss where we're going to see the Nifty levels as well as other sectors and stocks that are going to be pushing the benchmarks higher. And to do that, joining me this morning is Gaurang Shah of Geojit Financial Services. Good morning, Gaurang. Thank you for joining us this Monday morning. But give us a sense of what you're looking at, why this kind of correction or consolidation. Was it on expected lines? And is that why we're seeing at least the benchmarks now get into this volatility phase? And how long will it last, really?
Thank you, Stacy, and morning to all of you all. Thank you very much for inviting me on this program. So I think history is witness to our equity markets, Stacy, that whenever we've gone to the all-time high, post making that all-time high, the market tends to consolidate and make a base, expect a little bit of profit booking. Given the kind of run-up that we've seen, Stacy, on June 30th, if I'm not mistaken, I stand to be corrected if I am, we were at 19,000 level on the Nifty spot. From that level, we are on the 31st of July today. We saw an all-time high of 19,991. So almost 1,000-point rally, you can say, minus 8 points, because Nifty missed out on short of 8 points to make that 20,000 mark, which all of us were expecting. But nevertheless, so that 1,000-point rally in a month's time, I think even less than a month's time, to be very honest, it gives an opportunity for all those short-term, medium-term traders who would have possibly taken trades for that kind of a time horizon. And the money that they were making on those trades were very attractive and tempting to book profits. And it is always healthy, Stacy, to see a little bit of consolidation profit booking after the run-up and the rally that we've seen. So everything is in its place. And honestly speaking, from 19,991 to 19,646, where we closed on Friday, if you ask me in terms of percentage, it is not even 2% correction. So I don't think anybody has to complain on this. I think it's a healthy correction. And all corrections, as we're maintaining in our earlier statements and view on the markets, are great opportunity to accumulate good quality sound stocks from a long-term point of view. We may spend a little bit of time. Today, we might see a recovery. And on Friday also, actually, if you go to see, you did see a recovery from the lows that we were by the time the markets did wind up. So I think it's a great market to be in. Give it some time and we'll again start our journey up north.
Right. Gaurang, over the weekend, we also did see a couple of mid-cap names that came out with their earnings. But besides just the earnings giving that momentum, is the party really in the mid-cap space right now, other than the large caps and looking at the benchmarks? But how are you viewing these? Because they've been quite the outperformers if you have to look at them.
So let me put the entire universe in perspective for your viewers' benefit. So large cap, I think they'll continue to perform because that's where the earning visibility is there and that's where the aggressive come from. In the mid cap universe, I think what I would advise is you need to be extremely stock specific. Sorry, I beg your pardon, sector specific. Now within these sectors, which are those sectors? So I think mid cap IT will do well, mid cap FMCG, mid cap cement, mid cap banking, mid cap autos will do well. Mid cap pharma names. Cement names would do well. So I think these are the universe, if you ask me, Stacy, that you need to possibly look at mid-cap names. In the small cap, I think given the run-up and unfortunately not seeing that kind of excitement on the numbers front as far as earnings is concerned, I think you need to be extremely, extremely careful as far as the small cap universe is concerned.
Right. You did mention pharma looks like an interesting space, but we are seeing, quite those US FDA woos come in here and there. A couple of those inspections that have been called out for a few of them, but the earnings have been more or less on expected lines. So how should one be looking at the pharma sector specifically?
So if you ask our view at Geojit, Stacy, I think it is going to be stock-specific moves, and you need to possibly keep in mind that the kind of run-up that you saw post-COVID during the time the vaccines were launched, some oral medications were launched, that was the golden era for the pharma sector. And it is also a fact, Stacey, that India is, and will always remain pharmacy to the world. Unfortunately, going back to that kind of glory of performance like we saw post-COVID and the pharma universe performed the best, I don't think that kind of glory will come back. But like I said, stock specific, I think Aurobindo Pharma, Cipla, Dr. Reddy's, Sun Pharma, Divi's Laboratories would be the performers and may end up returning better than the sectorial index. In the diagnosis, we are positive on Dr. Lal Path Labs. And in the healthcare, that is hospitals, we like Apollo Hospital, Fortis Healthcare, and Narayan Rudalaya.
Right. Okay, what about your sense, if you're talking about broader themes, what would you look at now post these earnings? We've seen slew of the earnings, most of the heavyweights at least done and dusted with. What are the themes that one should be looking at?
So I have to name top three themes, Stacey. First would be banking and finance. Banking would include both private as well as public sector banks. State Bank of India, I believe, will be out this week, if I'm not mistaken.
Yes.
So that will be a great number to look out for, and I'm sure they'll do stellar performance. We have a buy coverage, having said that. So banking and finance, strong NBFCs, I beg your pardon, autos, FMCG, and IT. I think these would be the four primary sectors wherein I would advise your viewers and investors to nibble into some great names.
I'm surprised you're saying IT because we've not seen such a great earnings, at least from most of those bigger players. So what is the play really on IT? Is there going to be some kind of correction, you're saying?
This is exactly why we are positive, because a lot of people are negative. And I'm not saying that, Stacey, that things will start improving immediately. We do agree that 3-6 months are difficult times. But if you're not looking at 3 to 6 months, and if you're looking at maybe a year and a half, then I think at the valuation where the IT stocks are trading are great investment ideas. I'm talking about investment, long-term fundamentals. And I'm sure, Stacey, that whatever hangover is there right now with, low budget spend, discretionary cuts, headcounts not really coming in as expected, pressure on margins because of wage hike, large ticket clients, not too many to possibly rely upon. But these are all short to medium term, Stacey. And I think, not to forget, last year, first and second quarter, everybody was underweight. Third quarter, numbers unfold and everybody was positive. And you saw IT rally to a great extent. So, I mean, we are not saying that things will improve dramatically overnight. It will take time. But as an investment idea, I don't think one should ignore IT.
Right. Well, thanks, Gaurang Shah. They're giving us his top sectoral picks as well as, stocks that you could be looking out for. Thanks so much, Gaurang, for joining us this morning. So a lot to be looking forward to, but let's get some viewers' queries addressed as well. And to do that, joining me is Rajesh of Axis Securities. Good morning, Rajesh. Thank you so much for joining us. Now, we do have a lot of queries that have come in this morning, and a lot of people wanting to know where exactly they should be parking their money as we start this August series. But first, let me get a sense from you of what levels you're looking at for the Nifty. Are we likely to see consolidation around that 19,700 levels, and what are the support and resistance levels that you're putting in?
Good morning. So overall, if we analyze the setup for Nifty as well as for Bank Nifty, both indices are very well placed above their important support area on the near-term chart. In the previous session also, we have witnessed that 19,600 acted as a good support area. So till we are holding above 19,600, 19,550 level, then there is no as such worry in terms of any major corrective action we can see in the near term. On the other hand, if we are able to cross again above 19,750 level, then this rally will extend, and possibly we can scale up to the level of 20,000 for the August series also. So overall market breadth, market sentiments are on the bullish side only. Buy on dip should be your strategy. So for today's trading session or for this current week, we are expecting a range of 19,500 to 19,900 for Nifty. And for Bank Nifty, we are projecting range of 44,800 to 46,000 for Bank Nifty also. So both indices are looking attractive after a minor corrective action, and one should remain on the buying side. Buy and dip should be your strategy.
Right, buy on dips, the strategy that we should be, performing at this point for the markets in the way that they've been consolidating. But do stay on with us, Rajesh. Let's look at a couple of stocks that are going to be a buzz in trade today. One of them for sure will be Maruti ahead of its Q1 earnings. Now, we are given to understand that the estimates that we're looking at for the revenues are somewhere around 18% higher this time around, coming in at 31,437 crores. EBITDA is likely to see a 70% jump at 3,261 crore rupees, whereas OPM, that is operating profit margins, could be seen somewhere around 10.3% higher versus the 7.2%, whereas PAT, that we could see about a twofold jump, like we told you. And volume growth too could be a good, because of the good product mix as well as the price hikes, could see a bit of changes there. So let's ask Rajesh as well, how is he looking at Maruti today, given that it's its earnings? But from the auto pack in general too, we've been seeing a good set of numbers, one would say, in line pretty much. And is that what we're expecting from Maruti? But estimates are suggesting quite a good profit, at least for it, a twofold jump in its profits.
So ahead of number, stock is available near to its important support area of 50-day moving average, and we have seen consolidation is already taken place in the Maruti prices. So looking at setup, yes, we hold our bullish view since the stock is holding about 95.50 level, which is very important for the stock on the near term setup. So till stock holding about 9550 level, our view is on the bullish side. Once stock manages to cross above 97.50 level, then this rally can extend further higher, and then we can see a near-term rally towards 98.50 to 9900 in the continuation of this pullback, which we are seeing since last trading session. So hold your long position, keep stop loss of 95.50.
Right. We also saw a couple of earnings that came up over the weekend, and one of the queries that we're getting from Mohit Anand as well is to share your 3-month target for NHPC as well as Suzlon. Now, we did see a lot of action around Suzlon and that earnings too coming. So what is your view, and what is be the 3-month target that he should be keeping?
So most of the hydropower and power related stocks have done well in the last couple of weeks. NHPC has done well. There was a clear breakout on the near-term, short-term setup. Looking at the near-term, short-term setup, we hold our bullish view, and as the stock is now trading about to 46 level, so keep your stop loss is 46, and on the higher side for next 2 to 3 month perspective, the target should be around 64 to 66 on the higher side. Looking at the Suzlon setup, yes, there was a breakout on the Suzlon chart also. So looking at the near-term, short-term setup, we do expect furthermore upside we can see in the near-term to short-term. And on the higher side, the 26 to 28 could be the possible target on the higher side. Keep your stop loss at around 15 rupees.
Right, and staying with that space, we also saw NTPC declare its results over the weekend, and wherein its Q1 profit number has come in at 4,066 crore rupees. This is up about 9.4%, whereas the revenues too have come down by 2.3%. So we are going to see some bit of action even on NTPC. But staying with this space, we are also getting queries on Adani Green. That one's also going to be giving out its results today. So what are we looking at this, overall renewable space as well as power? How should one be viewing this?
Adani Green is still consolidating since last couple of weeks and stock not manages to give breakout above its 1120, 1130 zone. So which is very challenging level in the near term setup. So 1120 is the level where one should keep eye. Once stocks crosses above 1120 on a closing basis, then possibly this rally can extend towards 1200 to 1220 level also. So strong consolidation action has been there in the weekly chart. So view is still bullish, but one should keep a strict stop loss of 1020 to hold their long position.
Right. Let me also take you viewers through a couple of other earnings that came over the weekend. We had Marico, one of the FMCG players, wherein their profits have grown about 15.6% on a YOY basis, coming in at 436 crore rupees. You could say a healthy operating performance gains in quarter one. Revenues, though, have fallen by about 3.2% on a YOY basis, coming in at 2,477 crores. We did see some bit of weakness in the India and domestic business. One would say volume growth coming in just about 3%. And that's pretty much what we're seeing an average for the other FMCG players as well. HUL also came in at 3%, Nestle a bit lower than that. So volume growth, that picture not really changing much for these FMCG players. We have the monsoons in full swing across India and all. How much of that is going to have a bearing in the coming quarters, and how should one be playing the FMCG stocks at this point, Rajesh?
So most of the FMCG stocks have done well, especially in last 2-3 weeks. And most of the stocks have managed to give breakout on their near-term chart. Looking at the setup for Marico, there is a clear breakout on the daily, weekly, as well as monthly chart. So which clearly indicates that, if Marico continuously hold above 565 level, then possibly this stock can scale up to the level of 595 to 600 in the continuation of this uptrend. And if we analyze the other FMCG stocks, most of the stocks have done good recovery in last couple of weeks. So looking at the setup, we expect that, yes, rain impact is going to take place on the positive side for the most of the FMCG stocks. And we do expect furthermore upside in the coming weeks also for FMCG pack. So we like IndiaMart, we like Dabur also. Tata Consumer, Marico, these are all our preferred pick from this FMCG space, and we do expect furthermore rally can extend in the coming week also for most of the FMCG stocks.
Rajesh, before I let you go, one stock that is a buzz is that of Piramal Enterprise, and that's because they've also gone ahead and announced that share buyback worth of 1,750 crore rupees, and we're given to understand that price will be at around 1,250 per share, which is almost a 16.5% premium. How should one be looking at it? Is this a good time to be looking at Piramal Enterprise?
So very strong rally we have witnessed in last couple of months. This is the fourth consecutive month where stock is forming higher high-low formation, which clearly indicates that there is a sustained buying action is happening in the stock prices. And looking at the monthly chart also, there is a clear breakout on the falling channel on the monthly chart also, which is a sign of a trend reversal on the monthly chart. So yes, we expect furthermore upside we can see in the near term. 1200 could be the possible target in the continuation of this uptrend. One should hold their long position with stop loss of 1040.
Right. Rajesh, one last query that we would want answered. Vivek Kurup is writing in and he says he holds persistent at 4,780 and the target is around 5,550 to 6,000. So what should be the time frame that he should be keeping or looking at this for persistent?
So we have witnessed then most of the mid-cap IT stocks have shown a good recovery from their recent low, and persistent is also one of the stock. But since last couple of weeks, stock is consolidating in a broad range. Yes, the prices will come, the purchase price where he has bought, but it may take time, another one and a half month he has to hold the position. But on the other hand, one should keep a stop loss of 45.20 to hold their long position, because which is very important and critical support area on the near-term chart. To keep a stop loss of 45.20, and once the stock crosses above 4,800, then possibly stock can rally towards the 5,000, even 5,150 level on the higher side. So hold your position with stop loss of 4,520.
Well, thanks much for that, Rajesh Palviya, giving us strategies and stock ideas that we should be looking out for, and hope that answers Vivek's query as well. And for those whose queries haven't been answered, don't be disheartened. We are here just to be doing that, and we'll be getting your queries answered through the week. So keep writing to us. But it seems like that's all the time we have on this edition of Morning Trade. Don't go anywhere. Coming up next is Opening Bell.